Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money and Patty Cohen of Compass Realty. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme, again, is just general trivia. All right.
General trivia. Okay.
General trivia. Nam, tell us what's going on at Pacific Private Money.
Boy, I think Patty will echo some of my sentiments, but it's crazy. It's I thought it was going to be. I thought December. Well, we're only a couple days in December, but usually December for us is one of the crazier months. One of our busiest months, actually, just because we're so closely tied to residential real estate. The residential real estate market and purchases.
Yeah.
And usually at the end of the year, people want to get into their new home before the start of the new year, just for tax reasons, for just psychological reasons, making a change like that. So people, the real estate market has usually a jump at the end of the year, and it leads to, increased loan demand on our side of the real estate, transactions. But, I don't think it stopped. Q4 in general, October and November, were so busy with people wanting to get into their home that November was like December had been in years past. And so I'm thinking already, it's very early in December, but we're already seeing that kind of, last month of the year push again. Patty, are you seeing that? Hello, Patty, you there?
Patty, you there? Hello?
Well, you might be on mute or something happened. Well, let's keep going for a minute,
Yeah, okay.
Then maybe she'll jump on in the last segment. So, this year has just, not only has Q4 so far been busy, but, this is something that I've talked about really on every show that I've done this year,
Yeah.
which has been that it's just been a busy year. Real estate has been, the bellwether, as have other things. Like so many things have improved since the end of 2020, and with some, improvements in COVID, although we're seeing, some of the things get locked down again. But it's just been a crazy year, and it's funny because I put on my calendar I saved our predictions from last year.
Oh, okay.
That we did with you and Mark, and later in one of the segments, I want to go through these and see how we did.
Yeah, no, definitely.
But some of these predictions were around, unemployment, interest rates, the Dow, and I don't know if looking back, a year ago, if we thought we'd have the kind of year at Pacific Private Money that we've had.
COVID that kind of threw a whole, I don't want to say a monkey wrench, because in some cases it actually helped businesses, but it was an anomaly that, it's kind of hard to predict the future year.
Yeah. And so, well, before the end of the year, when Mark is available to do the show again, we should do predictions for 2022.
Yeah, that's a great idea.
Yeah, and see what, how things shake out. But maybe in the next segment or once Patty gets on, we can go through this together.
Okay.
But no, it's busier than ever. We've had, we'll have, our strongest year again, and we're just looking at growing in 2022, not only in loan volume, but also in geographic diversification and geographic footprint.
Hey, if the demand is there, you got to go with it, right?
Yeah, absolutely. So a lot of good things, and looking forward to hearing Patty's take on what's going on in real estate, the residential real estate market.
I do want to make a special mention. We're going to cut before we cut to a break. I do want to make a special mention here for the Lakeshore Lodge. We had them on a few weeks ago as a kind of a sponsor, and one of our listeners went there and came back and gave a testimonial and said that place was phenomenal. Make sure you tell everyone on the air. So the Tahoe Lakeshore Lodge and Spa provides guests with an all-freight lakefront hotel in South Lake Tahoe, where every lodge room and condominium has a view of the lake and the mountains. Guests can play or relax on over 500 feet of private beach and enjoy a dip in the outdoor heated pool. Check them out at www.tahoelakeshorelodge.com or go to 800-448-4577. Again, that's always kind of nice when a listener comes on and says, hey, by the way, I had a really good time at that place.
Yeah,
All right.
that's awesome.
Yeah, I thought that was pretty good. Also here, we have one more little mention here before we get to our trivia question. The Smewin Ballet. Get into the Christmas spirit with your favorite holiday tunes set to a new, exciting choreography. Celebrate the holidays with the Christmas Ballet, an annual show by the Smewin Contemporary Ballet that tours the San Francisco Bay Area. And that's SMUIN ballet.org. Check them out. All right. So we're going to cut to our first trivia question, and that would be, who became the vice president after Spiro T. Agnew resigned? You remember that? I mean, that was
No.
73, I think it was. You were just a youngster. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Again, here is the trivia question. Who became vice president after Spiro Agnew resigned? And if you remember, didn't he resign something to do with bribery or Watergate or one of those scandals? I think in his case it was I think it was a bribery, but I don't remember. I was 13, didn't follow politics way back then. All right,
yeah, exactly.
Stay with us. You're listening to The Best of Investing. Don't touch that dial. We are going to be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan, and Patty Cohen was able to join us. Let's cut to our trivia question, and then we'll have Patty come in. First trivia question, who became the vice president after Spiro Agnew resigned? Anyone?
Crickets.
Crickets, yeah. Mr. Cricket. No, that would be Gerald Ford. Yeah, right, because you remember he ended up becoming El Presidente. Yeah. All right, so Patty, thank you so much for joining us.
Yeah, so nice.
Okay. Well, since you were able to hear everything and Nam had said before, how are things going so far for you for 2021?
Well, I mean, it's an excellent year on every level for everyone. And you're right, Nam. It's still like very intense, but as it's typical for every December, except for last year, there's fewer buyers and fewer sellers. So in my perspective, I'm seeing a whole lot less activity, and you're probably seeing more because the people that want to do something now want to do something fast. Because what is happening is that the few listings that are out there are still getting snapped up because the supply and demand curves are in favor of the sellers still. At the same, those are kind of not moving as much right now. I've got 3 of them that are just sitting there. But I mean, for example, I heard the Mercury News cited a property in Los Altos, 5,000 square foot property listed for $5 million, 16 offers. It went $1,750,000 over asking.
Wow.
So 750. And it was the typical great school district, big yard, room for a family, and home office. That's what everybody wants. So I think in some ways it's more competitive in the upper end and like very, very high prices because inventory is not there. People have money, and the people that are, really out there are spending. I mean, I think also that what's fueling a lot of it is millennials entering the market, and that will continue because there's a bulge of millennials and pent up demand, basically.
Yeah.
And then
are these
international buyers can get jobs here now, and they're coming into the market. So Silicon Valley going crazy.
With millennials, are they able to buy? Are they buying more at the sort of entry level Of course, entry level here in the Bay Area is still over a million, a million, wherever you want to put it. But or are you seeing them kind of across the spectrum? So some of the, millennials in tech or whatever other
Yeah.
industries that are doing well, are they buying at the upper end?
Yeah, I mean, you're right. Like the entry level is kind of 1.5, and they're certainly
Mhm.
buying, and they're buying in 3 and 4 or $5 million houses. They are, for sure.
Yeah.
And
Wow.
it's amazing, really. Year over year, all 9 counties of the Bay Area surged year over year. Going from November. It's
Yeah.
but things are different. They are different than what it was.
Mm-hmm. And would you say just because it's different because there's fewer sellers and buyers, like you were saying, but it's still competitive because the inventory is still low, or
Cities, there's that, and there's the hyper overbid and
Mhm.
and then there are properties that are sitting. So whenever you get the crop, and this is true of any market, the horrible buyer's market, where things are just hard to sell. If you are in the profile, your house is the profile of what it's going to sell. And these days, what that is close, in the flats, good school district, decent house, sort of close to a town, basically in the flats. And, they're just going. That's what's going.
Wow. Yeah. Yeah. So what do you think for 2022? One of the things I think you heard, we were talking about predictions for 2021 that Mark, Edward, and I made this time last year. We'll go over it in the next segment. But what do you think real estate's going to do in 2022? I won't hold you to it, obviously, but I'm going to make some big bets based on what you tell me.
Well, that's something I was just looking at for this show, as well as for an email I'm sending out to all my clients. I've got, hold on a second, this comes. I want to pull it up. I mean, it's some good stuff. Experts weighing in on appreciation, on, let's get that. I have to. Okay. Experts weighing in on appreciation, on volume of homes selling, on, yeah. Okay, there we go. Sorry. Yeah, I want to get this. I want to get these slides.
Got it. So while you're pulling that up,
Yeah, Patty, while you're pulling that up, I tell you what, let me cut to a commercial break, and we'll ask a trivia question. Patty will be pulling up that interesting information and give it to us as soon as we get back. All right, here's our second trivia question. Who was America's first billionaire? Now, Nam, I know you're trying to be the world's first trillionaire, and you have a little ways to go, but who was the world's first billionaire? All right, call 888-912-1190. First caller with the correct answer is going to win that tanning certificate, which is worth over $100 at Tan Bella. Last time, I'm going to ask this one more time. Who was America's first billionaire? Call 888-912-1190. When we come back, I also want to ask a couple of email questions that came in from listeners. For Nam, it's going to be, if interest rates rise, will demand for your product go up or down? And for Patty, if interest rates seem to be rising, will this negatively affect real estate prices, in your opinion? So we're going to ask Patty's opinion on that. When we come back, Patty will answer she'll get all that research for us. And then we want to find out with Nam how Pacific Private Money is doing with regard to their funds, and how the audience can participate. Don't touch that dial. We are going to be right back. Welcome back to The Best of Investing. Edward Brown here, along with Nam Phan and Patty Cohen. Our second trivia question: who was America's first billionaire?
Is it Rockefeller?
Rockefeller, John D. Rockefeller. That is correct.
I say I thought that was too much money for that time. This is a
No,
lot.
yeah, no, he actually did get it. So, Patty, you found your specifics you were looking for.
Yeah, I mean, we were talking about what, the effective rates up, right? So I've got this, I'm looking at the chart, Freddie Mae 30-year fixed, where are they going? And so you got to look at it at a historical perspective, because we are still at incredibly low interest rates. Say we're, below 3.2 right now and have been kind of the last couple of years. Well, this prediction says, first quarter Q1 3.2, Q2. I'm sorry. So right now Q4 3.2,
Okay.
1 3.4, Q next year 3.5, and then 3.6. That's not a lot. I don't think is going to have any impact, honestly. Do you?
No, I don't think. I mean, I think it'll have some impact, but I mean, those are still incredible rates at the end of the day. So
yeah, I mean, look at 10 years ago when we were saying, this is the best rates in 30 years. I mean, it just got better and better and better. And so, yeah, up a little bit, but I don't think it'll have an impact.
Yeah, I think what'll be more impactful is just overall inflation and, the people's, what the cost of goods, everything else other than housing, the cost.
The biggest hedge against inflation is real estate. So buy real estate because it goes up just like everything else. And so it's not so much that interest rates are going to be the issue. You're right. It's going to be the rising prices.
Yeah. So that'll be interesting, though. I mean, so if you don't mind, what I'd like to do is let me read through the predictions from last year. While we're doing that, maybe we can use the same questions then have you guys guess what we think is going to happen this time next year. So let me go through. There are 5 questions that I asked that we asked last year with Mark and Edward, and the first one was, will real estate have appreciated by the end of December 2021? And I gave a range, but I don't remember what the range is now. But Mark, Edward, both you and Mark said it'll appreciate between 0 to 5%.
Whoa!
So I think it's higher.
I think it's higher. Yep.
Yeah. Number 2, will interest rates be above or below 3.5%? And both of you both say below 3.5. You're right there. It's currently at 2.75-ish or something.
Okay.
Will the Dow be above or below 30,000? Both you and Mark said below 30,000. Right now it's 34,639. Although, you know what? I guess we could, maybe by the end of this month, it could drop below that, and you guys would be right.
I'd have to sell a lot of stock for that to happen.
It's just you. We had an anomaly in San Rafael, California. Drove this Dow down. Okay, well, unemployment as of December 3rd, 2020, at 6.9%. Be above or below 4%. Both you and Mark said above 4%, and it's currently at 4.6. So, yeah. And will we be able to go to concerts, sporting events by December 2021? Both you and Mark agreed that we would be able to go to concerts.
Well, technically you can, right?
Yeah. So you're right.
Okay.
So
Not too bad.
Want to.
So what do you think, Patty? Do you think, going back now, appreciation, do you think real estate prices will appreciate above 5% this time next year?
Yes. I mean, actually, the what the experts are saying, it's right in the middle of 5%, but I think it will. I mean, because we've got, of all the reasons, inflation and millennials and lack of, and now I'm mostly speaking, I know this is Bay Area, right? I'm mostly Marin. So
All right, so we'll add that little caveat there, Patty. Patty says 5%, greater than 5% in Marin.
Yeah. Hey,
All
Patty,
right.
we're going to ask you an email question that comes in. Interest rates do seem to be rising. Will this negatively affect real estate prices, in your opinion? What do you think?
Well, we just sort of answered that, which is, I don't think so. But I don't think it's going to be interest rates that do it. I think it's going to be inflation, and not just so much the inflation in the prices, of real estate because they inflate. Just but also, bread, milk, furniture, TVs, cars. So people will have less money. So I think they'll be affected, but not.
Okay, fair enough. Patty, how do people get a hold of you if they have questions about real estate?
Oh, that's great. And I'm happy to share these slides that I've got with the predictions from experts.
Yeah.
Phone, PATTI.COHN@compass.com. And my phone number is 415-722-4842. bestmarinagent.com.
Yeah, I like that. Nom, we have a minute here for you. If interest rates rise, will demand for your product go up or down?
Yeah, good question. I mean, so kind of along what Patty was saying, I guess this all depends on how much interest rates rise. But generally, there's pros and cons to interest rates rising. Some things that will cause lending to drop a little bit is affordability if if interest rates rise to the point where they can't. But a lot of people who borrow from us are investors, and they're buying a home to maybe fix or flip. And oftentimes they're not worried about interest rates because they're in the loan for such a short period of time that it plays less of a role in their decision in purchasing a property. I mean, profitability for flipping a home or buying and holding it has more to do with the acquisition costs and the rehab costs, more so than the interest rate, at least for a hard money interest rate, because it's short term.
Gotcha.
Now, refinancing into a long-term rate, and that might have more of an impact if rates rise for the loan that they want to take out long-term, to take out our loan. But
okay. And how do people get a hold of you? We're going to next segment. We'll talk a little bit about how your funds are doing, but give us your information.
Sure. So our phone number is 415-883-2150, or you can email or go to our website, www.pacificprivatemoney.com.
All right. Here's our last trivia question here. The George M. Cohan song "Over There" was written as a rally cry during what war? Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Stay with us. You are listening to The Best of Investing. We're going to be right back. Well, welcome back to The Best of Investing. Edward Brown here along with Nom Fawn and Patty Cohen. Third trivia question. The George M. Cohan song "Over There" was written as a rally cry during what war?
World War II?
World War I. Yeah, over there, send the Yanks over there, right?
Yeah.
No. That the Yanks, tell them that the Yanks are coming. The Yanks are coming. There you go. And we won't be back till they're over here. Whatever. Okay. Anyway, it was World War I. That's the answer. Okay. So Nom, Pacific Private Money, you have a few different funds. Tell us a little about them.
Sure. So Pacific Private Money, we make loans to people who are buying homes to either move into, so very popular right now is our bridge loan, or people who are buying homes to rent and hold or rent out, and that's growing very quickly, as well as people who are borrowing money to build homes, so developers. And so we've launched several funds. I mean, we've had our legacy fund, the Pacific Private Money Fund, now for going on 13 years, or excuse me, 8 years. And but in 2020, during the pandemic, we launched several new funds, 3 funds, and they're all now over a year old, a year and a half old. So after the Pacific Private Money Fund, we launched the Pacific Freedom Fund. That one is a fund that pays a fixed 6% rate of return. And the nice feature about the Pacific Freedom Fund is it's highly liquid, meaning as an investor, you can redeem your investment quickly, within a couple of weeks, sometimes a week or so. But it pays a flat 6%. So a lot of people are attracted to this fund because they're sitting on idle capital. They're trusted investors who got paid off on a loan and they want to park it somewhere until the next opportunity comes up. Or, we've had people pull out of the stock market because it's been so frothy. They're taking money off the table or putting it in the Freedom Fund and then just figuring out how to reposition their portfolio before they make their next, investment in the stock market or what have you. But in the meantime, they're earning 6%. So that's a nice feature of the Freedom Fund. Next comes the Southwest Note Fund, which, operates similarly to the Freedom Fund, but it pays a little bit higher of a fixed return, and that's 7.5%. The Southwest Note Fund, though, is more focused on purchasing and holding seller carryback notes in Texas today. It'll be in other states in the future, but purchasing seller carryback notes that note holders, sellers want to get rid of after they've held them for a number of years, and oftentimes they're willing to sell them at a pretty good discount, a healthy discount for us. But it pays a fixed 7.5%, and just like the Freedom Fund, it's a fairly liquid fund where if you needed to redeem your capital, you could do so. Probably within 2 to 4 weeks or so, would you say, Edward?
Yeah.
And then the last fund is the North Star Capital Fund, and that one is a ground-up construction fund, and meaning that we make loans to builders and developers who are acquiring, lots or properties that need significant work. For lots, obviously, it's building from the ground up, or maybe it's taking a project and completing it or doing rehab work. But that one pays a target of 8 to 10%, and distributions on that one are paid out quarterly. In all of these funds, you do need to be accredited, meaning having $1 million net worth, exclusive of your personal residence, or you can qualify on income. You have to show 200,000 a year in, I believe, AGI for the last 2 years as an individual, or 300,000 as a couple. Or you can actually qualify now based on your profession. But you should read up on the definition of accredited investors for professionals. And it's somebody like a CPA or an attorney or a qualified financial advisor. People who have, through education, are sophisticated or have the education to make these types of financial investment decisions. But in any event, if you're interested in learning about any of the funds, you can give us a call at 415-883-2150, or again, go to our website, www.pacificprivatemoney.com. We haven't done a webinar in a while, and certainly we haven't done a live event in a while. Hopefully we can get those on the calendar for 2022. Maybe a live event would be good.
Would be great.
Yeah.
It's interesting, Patty, you were talking about inflation before, and I wanted to bring this up a couple of weeks ago and just hadn't gotten around to it. But the inflation of those, the 40-foot shipping containers.
Yeah.
That had been sitting out at the bay for quite a while, right?
Ah.
That the price was about $2,000 for a container. It shot all the way up to $25,000.
Jeez.
More than 10.
Really? Why did it go up? Because I thought it was their idle. Is it just you can't get a hold of an empty container?
Yeah.
Ah.
Yeah. So I don't know. How is that going right now? Are they still out at the bay? I mean, they're supposed to be working 24/7 to bring them in. I haven't looked out in the bay recently.
Yeah. It reminds me of the cost to rent a van to move out of the state is about, or not rent a van, but a moving truck, whatever. Cost to move is about 5 times more than the cost of bringing that moving into the state, because there's more people leaving.
Wow.
Yeah, maybe there's a job that you can get for some people to drive some of these moving vans back from other states.
Oh yeah, no, they definitely have. Like let's say you're moving, let's say from California to New York, you can pay someone. You want to fly, but you can pay someone to drive your car there, and then then they fly back. So why not a truck? I mean, you probably have to have a class 1 license if it's going to be a big truck. But
yeah,
that's not a bad.
Like a U-Haul? Yeah.
Yeah, but a general U-Haul one, yeah, pretty much any. I think a regular Class C license can do that, can't they?
Yeah, I think so. So there you go. Our weekends are now.
Are now booked up. Hey, use an extra income.
Yeah, there you go. We'll be road tripping.
Well, that would be an excellent idea. In fact, my brother-in-law, he's one of the guys who, I gotta say, he doesn't work for the NFL. He works for a trucking company, but he goes to the games, and he's the guy who holds like the big satellite dish for the sound. And
Uh-huh.
a lot of times he has to run up and down the field.
Really?
Yeah, and sometimes, otherwise, sometimes he's just in the end zone, and he's just
Yeah.
holding the dish. So,
No way.
I
That's
don't know how often he
interesting.
gets to actually enjoy the game because, he's working. He's, put down
Yeah, I'm surprised they haven't figured out some technology to do that. But,
yeah.
that's interesting
But they
though.
still,
That's
they still have to truck the equipment, so they might as well have him.
Oh, right.
He's done. He puts it back on the truck and sends it on back home.
That's cool.
All right.
Huh.
So we've got to cut to our last commercial break. No trivia question. When we come back, we'll have a few minutes for some closing thoughts. So think about what you guys want to cover in the last couple of minutes. All right, Patty and Nom, stay with us.
Absolutely.
The Best of Investing will be back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nom Fawn of Pacific Private Money and Patty Cohn of Compass Realty. Patty, we didn't have a trivia question, but Patty, I wanted to ask you, are you seeing more deals fall out of escrow?
Yeah, I am. I am seeing,
Why is that?
and it's a little bit typical this time of year, but not as much as I'm seeing now. And it's mostly because the buyer didn't qualify. So
Okay.
and it's always advised, go out in the winter, you can get a deal, blah, blah, blah. Sometimes that's true, but many times now it's not. But they're sort of marginal buyers. They haven't been able to compete with they haven't been able to get anything, and they might have been looking for years, but now they think they can take a shot, but somehow they're not qualifying. So are they not realistic, or are the lenders tightening? I'm not sure.
Oh, interesting. Okay. Yeah, we're getting a few deals coming to us where the loans are just taking longer than than anyone had planned. But then again, that's been happening in this market because buyers are making such aggressive offers that it's putting a lot of pressure on the lenders to actually close on in a time, in a fashion that's faster than than they're customary to.
Well, and I mean, when you have COVID issues where not everyone's back in the office, there's the inefficiency that goes.
Yeah.
And
I mean, and that was much more the case like 6, 8, 10 months ago because you have title and escrow, the same thing. You have fewer people in the office, and how effectively can you work,
yeah,
on a file from home, and plus with the lenders, working remote, how quickly. So, it's just, all parties involved were a little bit hamstrung by COVID and not being able to come into the office in some cases. But then, with the super hot market, people were making super aggressive, we'll close fast, get the offer accepted, and then hope that the lender can follow through or hope they can get extensions.
yeah.
A lot of times they can, but there's few times when a seller is sitting on backup offers that are significantly higher than the primary purchasers, and all of a sudden they're like, yeah, I'd be happy if this deal fell apart.
Exactly.
So they come to us. A lot of these borrowers do, and we help them with a bridge loan to close that deal. But puts us in a rush, although that we're used to it. It's not the preferred way of doing it, but at the end of the day, we can help.
You guys open up your own escrow company, and you can control it. I don't know what it takes to do that.
In California, a lot of companies, in Southern California, a lot of real estate companies also have escrow companies. So it's a certain kind of licensing, but I don't know. Maybe that's Edwards Escrow.
Yeah, sure. Why not?
EE.
I mean, Compass is getting so big. Maybe they could. Well, of course, they're not the lender, so maybe that would be a little bit different for them to be.
But if they have escrow, they do have control. So yeah, in a lot of parts of Southern California, real estate companies also have escrow companies, which is interesting. But it's a way to control it, definitely.
All right, Patty, give out your information one more time. People have questions on real estate, please.
Sure, I'm a real estate broker for 32 years. My name is Patty Cohn. I'm at 415-722-4842. And I can be reached also at Patty, P-A-T-T-I, .Cohn, C-O-H-N, at compass.com.
Okay, and Nom, why don't you give out your information and we'll cut through our thoughts for the day.
Sure. You can reach us at 415-883-2150. That's Pacific Private Money's main line, or you can go to www.pacificprivatemoney.com.
Very good. All right, here's our thoughts for the day. Why did the Italian chef call the locksmith gnocchi? Gnocchi. I like that, huh?
Hey.
Oh my God.
And I didn't think I needed I didn't think orthopedic shoes would help, but I stand corrected. I like that one too.
That's a good
All
one.
right, tune in next week to The Best of Investing. We'll be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.